What's up, everyone? It's Amira Blake bringing you a solid update that foreign investors cannot afford to ignore. This comes straight from Carmel Brokerage and features the latest power moves by Bank of Baghdad for Q1 2025, and the vision ahead is nothing short of bold. So here's what's happening. Bank of Baghdad just released its Q1 2025 results, and they're making headlines. We're talking about 71 billion Iraqi dinars in net profit. That's not a typo, and it marks a historic high for Iraq's banking sector. The loan portfolio has surged to 56 billion dinars, and it's projected to hit 100 billion dinars by Q2. That kind of growth tells us there's serious credit activity picking up, with potential knock-on effects for housing, business development, and local investments. All great signs for Iraq's economic pulse. Liquidity? Bank of Baghdad is sitting on 2.3 trillion IQD with a liquidity coverage ratio of 287%. That's well above global Basel III standards. Add in a capital adequacy ratio of 27.5%, and you've got a fortress balance sheet. Now listen closely. This is where it gets strategic. The central bank's new regulations are squeezing profits from foreign remittance flows. Most banks would stall, but Bank of Bad is playing chess, not checkers. They've shifted gears, reallocating capital and attention toward domestic loan growth, which not only cushions revenue, but opens the door to longer-term, compounding interest income. This shift means predictable, recurring revenue, and that's golden in any market, but especially in Iraq, where volatility can run high. It also means more robust financials that appeal to both institutional and retail investors looking for consistency. So what does this do to the stock price? It positions Bank of Baghdad as a lower risk, higher reward banking stock. With profit stability on the rise, dividend capacity strengthens, and so does market confidence. If this performance continues, you're likely to see positive upward pressure on the share price as more investors chase the bank's yield and growth profile. This strategic pivot could be the very catalyst that breaks Bank of Baghdad out of consolidation and into a new trading range. But that's not all. The bank is also negotiating a $1 billion sovereign loan deal with the Ministry of Finance, backed by the Iraqi government. That's foreign capital, locked in for 10 years, a powerful confidence signal to global markets. And on the ground, they're rolling out a 70-branch expansion strategy, fully owned. That scale tells us this isn't just short-term maneuvering. It's a calculated plan to dominate market share and strengthen distribution across Iraq. So what does this mean if you're a foreign investor holding shares in Bank of Baghdad? It means you're holding a piece of a financial institution that's outperforming on profit, securing government partnerships, expanding operations, and finding creative ways to maintain growth even under regulatory changes. This is the kind of position investors dream about: high performance with a protective moat forming around it. Foreign investors, take note, this isn't just a profitable bank. This is a blueprint for modern Iraqi banking with transparency, capital growth, and government collaboration all moving in sync. If you're watching the ISX or thinking about positioning ahead of Iraq's next wave of reforms, Bank of Baghdad just made a strong case for why it belongs on your radar. Stay sharp, stay invested. I'm Amira Blake, and I'll catch you on the next deep dive.